Hello to everybody, Future Trend Channel is glad to welcome all of our subscribers, and for the date of 11 of February 2019 we are ready to present our point of view of how to trade major currencies in the world financial markets for this week. Let's be truth, the situation now is absolutely in favor of another upswing of the United States currency. That's because of the global economy slowdown. As you could see at the moment, China as well as for example Europe is in really kind of not a deep recession, but anyway a kind of economic downswing, and in case of such kind of process will take a more prolonged kind of time. And in case of such kind of weakness could translate into a real kind of global recession, of course it will not bode well for the subsequent currencies, for example for the euro dollar and for the Chinese yuan. At the moment, anyway, let's concentrate our attention on the euro dollar. There are a lot of analytics, a lot of analysts, traders who predict in case of deepening and closing below the pivotal support barrier of 113, a kind of prolonged weakness for the euro currency. We are not so pessimistic right now about the euro currency. Of course, we should understand that's from the point of view of a monetary policy difference, of course, the situation is in favor of the United States currency. But in case of a real economic recession, and in that case probably global central banks will need another round of stimulating of the economy, and in that case, of course, the United States Central Bank will be in much better position than, for example, the European Central Bank. But in case of kind of ordinary weakness, and after that a kind of upswing of, for example, the European economy, not now, but probably till the end of 2019, the situation will be under control, and in that case, and in case of Central Bank of the United States enters a period of cutting its interest rates, at the same time European Central Bank will be at the steady position, and from that point of view the difference between the interest rates and the reaction of the futures market to this kind of process will be in favor of the euro currency. We should understand that, because the interest rates will be narrowed, so the spread between the interest rates between the European and United States will be narrower. That means that probably the European currency will be in a better position to rise. Anyway, we should understand that at the moment, for example, European government papers, and we take in that case we take the bonds, and the bonds, German so-called German treasuries, German bonds at the moment is trading just 0.1% higher than the zero level, so much lower, for example, than the corresponding United States government papers. And from that point of view, and also from the point of view of so-called safe haven status of the United States currency, but we suggest that from a point of view of economic logic it's absolutely abnormal to think so. Anyway, now the situation is in favor of the United States currency also from the point of view of safe haven status, because of a contradiction of the United States with big difference of the United States with its main trading partner, China. In case of further deepening in the relation between these two economic superpowers, we should understand that in that case United States currency will receive a kind of additional boost to the upside. So all in all, anyway, we suggest that from the point of view of economic logic, and also on the technical basis, at the moment, not right now. Not everything is so dramatically negative for the euro currency, and we suggest that even in case of deepening, and it even could happen today or during this week, in case of deepening below the level of 1290, for example, or the level of 113. Don't forget that we touched a low 1290 just on 24th of January. We suggest that even in that case, it could be a reaction further to the downside and possible retest of the level of the lows of 2018, that's located around 112.15, and even probably undershooting of this level. Anyway, we are not so pessimistic as regarding the euro currency could fall even to the level below 110. But of course, from the point of view of saving your long positions, we need to put a stop loss, and probably today is it's a time to put stop loss below the level of 112.90, 113, because in that case you could see some lower levels and you can enter a fresh long position at the lower levels. That's why, as you could see, we are ready to add to our long position in the euro dollar at the level of 113 with a very close stop loss. As regarding some other currencies, some other major currencies, dollar yen is trading just below the psychologically important barrier 110, probably subsequent closing, firmer closing above that level could take the pair higher, and in that case during the week we could test the moving average 200 daily line that's located around 111.26. From technical point of view, closing above that level as well as 100 daily line that's located around 111.73 could translate into continuation of the uptrend, global kind of longer term uptrend of the dollar yen pair. As regarding cable is trading around 129.30. We suggest there should be fresh offers nearing the level of 190. Also now it's a kind of psychological resistance, but not everything is so bad for the British currency, because we seeing that there are a lot of buy orders, a lot of optimists who continue to suggest that sooner or later the Brexit deal will be approved by the British Parliament, and in that case, of course, the British pound will receive a kind of a real kind of boost to the upside. As regarding dollar Swiss, don't put a lot of attention on this kind of false move during this night. It's a problem of this liquidity provider. We suggest that dollar Swiss should trade from a risk-reward consideration, from a risk-on considerations, risk-averse considerations, should trade around the parity level, and sooner or later will slowly tend to the south. We suggest that overall the situation is not so positive for the dollar Swiss in such kind of environment we have at the moment, and sooner or later the dollar Swiss will tend back from that upper levels, probably turn around to the level of 99, where lies for example a moving average 200 daily line 0.9907, and even retest its uptrend, its current uptrend located around 97.90, 97.80. At the moment, that's all. We could not tell that there are a lot of movement, for example, in the Euro crosses. Also, don't forget that the economic calendar is rather empty for today. For the commodity block of currency, probably it will take some more attention from your side because of United States senior relations trading around trading agreement. Probably it's more interesting to trade right now in commodity block of currencies, for example, like the Aussie dollar and New Zealand dollar. And don't forget that during this week the New Zealand central bank will gather, deciding its future of its monetary policy. Probably it will absorb some of your attention. At the moment, that's all. As regarding dollar ruble and euro ruble, we invite you to visit our Russian speaking site, where we will discuss the technical point of view of trading different currency pairs, the technical point of view of the company Future Trend Research. At the moment, we invite you to this channel to listen to the professional point of view of how to trade major currencies from a technical point of view in current environment. Thank you, see you later, and take care.